nothing they like doing better than spending money. So
Whose
it's
money?
like
Not theirs.
our money. Yeah. Again, they like to spend our money. And it's like this standoff over, are we going to jointly be able to spend more money? I mean, I don't know if I get my kids together and have them argue over whether they're going to be able to spend more money, they're pretty much going to come to the conclusion, yes. Well, do we want to talk about debt ceiling? I mean, honestly, I don't want to talk about debt ceiling, but I feel like we have to. I think we've been talking about this for at least several months, for sure on Monthly Market Matters. And I think we've said the same thing, and basically it's played out a lot like we've talked about that, hey, this is a big political exercise. There's definitely leverage to be gained on both sides, and they're exploiting that leverage. And we're going to get it down to the 11th hour. And I will say we do record this, so by the time this comes out, they may have switched gears and gone a different direction with the debt ceiling limit. But they're definitely going to drag it out to the very end. From everything that we know, everything we read, everything again from dealing this day to day, this is very, what did you call it, political theater. It's it's front and center of the news. Everybody's going to talk about it. Is the government going to default? We were just talking about it before we even got on this. That I mean, literally, the government's missed zero payments, zero T-bill bond payments in the history of the United States government. So, is it a possibility? Sure, it is. If I were a betting man, I would say this gets resolved at the 11th hour, just in time for just before the money runs out. But we can go.
Well, we have a slide on that too that just shows kind of the debt ceiling. So most people, it's been a little while since we talked about it because they've had an extended period here. But this has happened 78 times since 1960 that the Congress has essentially adjusted the debt ceiling.
But it's different this time, Kyle.
It's different. It's always different, right? Until it's not.
Never different.
So really, this just shows too that 2011 and 2013 were really kind of the big ones. Where in 11 they actually downgraded our credit rating prior to defaulting, just because there was poor negotiation and wasn't a lot of progress, and so it was anticipation, and so they essentially penalized the country's credit rating. And so the other one was in 2013, where the government shut down for 16 days. But again, kind of showing kind of what the stock market did there. 3 months prior to it, while everybody's sitting here waiting for Congress to act in the 11th hour, market was negative, at least in 2011. But you look at it a year later, once the noise and everything kind of boils over, and they've actually raised the debt ceiling, and I like to call it kick the can down the road, because really nothing gets solved.
Well, the 2011 one was I remember that very clearly. That was the first time I'd ever heard of them downgrading U.S. credit.
Yep.
And the bonds went up in price dramatically.
Yeah.
So it's the only time I've ever seen somebody get their credit rating lowered, and it was a positive outcome. I mean, part of the positive outcome was they raised the debt ceiling and nobody missed payments, but that's a huge deal. But the news literally today was that one of the credit rating agencies is about to downgrade U.S. credit, and so you're probably in for a bond rally.
Yeah.
Well, I mean, and when you break it down, the irony is when you break it down to its simplest terms, you're literally talking about politicians agreeing to be able to spend more money. There's nothing they like doing better than spending money. So
whose money? Not theirs.
Our money. Yeah. Again, they like to spend our money. And it's like this standoff over, are we going to jointly be able to spend more money? I mean, I don't know if I get my kids together and have them argue over whether they're going to be able to spend more money, they're pretty much going to come to the conclusion, yes.
Raise their allowance?
Can do that.
Raise their own allowance?
Can I spend more dad's money? Sure. I think we can. So again, it's a lot of fear sells, and that's what we're seeing on the news. And really, there's not a lot else to talk about right now. Coming into the summer, so debt ceiling is the big topic.
But we sit here and we kind of joke around about it a little bit, just because it's consumed our days for the last few weeks here. Personally, I don't know about you guys, but I've actually had more calls about the debt ceiling than I did during the market sell-off last year. And so we're actually seeing an impact in the markets last year with both stocks and bonds. People seem to be a little more calm. I think is because they understood inflation was high, interest rates, there's a war in Ukraine. I think it just kind of made sense. But now the way that the media always tries to sensationalize everything, front and center headline, government's going to shut down, and debt ceiling and without fully understanding what it means and the fact that this isn't the first time we've been here, it's just creating, it seems like, a little bit extra panic right now in clients. And so I want to be sensitive to that, but also kind of reassure clients that, we don't have a crystal ball. We don't know for sure that the debt ceiling is going to get raised. We're just saying that 78 times prior to this, it has. And at the end of the day, our thoughts and our guts are that, they'll figure something out. Neither side's going to get everything what they want, but at the end of the day, they're going to spend more money. So,
yeah,
and it may not be by June 2nd, but it may be, before or after. Who knows what the actual timeline is? But from a long-term perspective, it's not something that I have a lot of concern on.
Yeah, it sounds like Adam's old possibilities and probabilities. Possibilities and probabilities.
Anything's possible. Anything's possible again, but we can't create portfolios. We can't invest. We can't do financial planning for things that are possible. And when I say possible, I mean in the realm of less than 1%, 0.01% chance. I mean, I always use facetious examples, but they're true. Like, I mean, we could be invaded by aliens, this week. We could get hit by a meteor. I mean, those things are possible, but there's not probable. And so, again, you look at history, 78 times they've raised it. This is politicians agreeing to spend more money, spend other people's money. I think it's probably going to get done. Again, they're extorting leverage on each other to get a few things they want and their pet project needs. But at the end of the day, I think the government will go on and especially bond payments. I mean, listen, there may be some other issues, but they're not going to miss bond payments. That's a very critical part of our government and our financial system working.
If you ever want to borrow money again, then you don't fail on that. And that's right. All want to be able to borrow more money. And the thing is too, I mean, when you think about it, like if I owe you money, Adam, and I've got a printing press in my basement, why am I not going to pay you? And so if these guys can just keep printing money, why would they not pay their bills? And the underlying strategy might be to keep inflating money, make dollars worth less, because then 32 trillion doesn't seem like it's worth all that much if the dollar keeps being worth less. And so it could be a long strategy there, but it'd be very foolish for them to fail on a bond, especially when they can just make more money.
Well, and just to kind of wrap it all up on that, I mean, bottom line is you talk about fear and panic and possibilities and probabilities. I mean, that's why majority of our clients, we have financial plans for, and the financial plans account for market fluctuations, market pull downs. The when or the why may be different each time, but we're accounting for that type of volatility. And in something like the debt ceiling, if they do kick it down the road a little bit longer and take longer to get it approved, there's probably going to be a lot more volatility in the short term in the markets, and we're sensitive to that. We realize that, but we account for it. But history shows that once we kind of get through it down the road, you're better off, and it's one of those things that it's something we plan for. So.